Dymond, tell us about 1099 edge cases that break brains without breaking ours.
Oh my goodness. Thank you for asking. So let's see. Just want to know real quick in the chat, give me an example of an odd scenario that has made you spiral out in the past. And also just one word that describes an emotion of how you feel when you have to research edge cases that make you spiral out.
Is in effing sane a one word?
Yeah. Yes.
Stress is another one. Okay, due to froms on 1099s. That's a really good edge case there.
Fantastic. That one comes up a lot.
One of the ones that I was looking at recently was a tenancy in common situation because those are reported on tax returns based on percentage ownership instead of having a separate entity where it's reported. The person was wondering, do I issue a 1099s in percentage as well? Which is a really good question. Spoiler alert, the answer is no. However, ChatGPT thought that she was right. And I was like, because every once in a while I test my Ask a CPA answers. I will run my own answers through ChatGPT. I'll run the question through ChatGPT to see if it matches my answer. And most of the time when it's wrong or like when they differ, it's wrong. And because there's bad information out there. And that was a really weird one. Interest paid to owners, payments to owners for Augusta rule rent. Ooh, that's a really good one. Payments that the vendor considers a reimbursement and they feel they should not be on the 1099. Yes, get that one a lot. Rented dumpsters for construction. New client hasn't done that in the past. New to me too. Lots of really weird edge ones. Yeah.
Yeah,
Stressy.
everybody's so creative. I love that woman on Instagram where she does those videos. Have you seen her? The Everybody's So Creative lady? Oh, she's great. She finds videos of people doing various different processes in creative ways. Some might call it wrong. She calls it everybody's so creative.
Okay.
Yes.
So
Do expenses reimbursed to contractors go on 1099s? I'm being told both yes and no.
because the answer is both yes and no.
Because
That's
it
why.
depends.
It depends. It's so many things in tax. It depends. Here's another one. Payment to a title company used to wire money for a property. Aha. Not sure if that needs a 1099. I don't know if that needs a 1099 either. I'm going to have to think about that one.
Yeah. Yeah. So these are so good. And it's interesting to me.
It's been a weird week for me.
Oh, girl, it is the second to last week in January, and we're all bookkeepers. It has been a weird week for everyone.
Yeah.
Yeah. I'm not minimizing your pain. I'm just saying you're not alone. And Dymond, I'm happy to keep an eye on chat so that you can focus on the slides.
So today we'll be covering some edge cases for, I'm assuming that most of you here have at least some painful history with 1099 prep in your background. This is for intermediate experienced folks. But we'll give you some frameworks and then we'll help you with the documentation strategy that you'll need to back up these gray areas so that you feel like you've managed your risk well enough. Okay. Oh, real quick about us.
Oh,
I always
great.
forget to introduce myself.
Yeah.
I'm Dymond. I am the chief resident rabbit holer of 1099 Problems. My LinkedIn QR code is right there on the screen, so would love to connect with y'all. Also, I am honored to be joined today by the effervescent, amazing, wonderful Nancy McClelland, aka the dancing accountant. So often, and here's her LinkedIn code as well, so that y'all can connect with both of us. We're very friendly and we're very active on the LinkedIns. So a lot of times when folks come to me with questions on 1099 rules and reporting regulations, a lot of times the questions are really accounting rule related because it's all downstream, right? The 1099 is like the bottom of the cascade. So for those accounting rules and those really tricky issues, I tap Nancy as a resource, right? Because she's built an entire ecosystem for helping bookkeepers precisely with these kinds of questions in her Ask a CPA community. So it's a pleasure to have you join us today,
Thank you for
Nancy.
having me here. I can do what I do only because you do what you do, because heck, I am going down that rabbit hole. So thank you very much for having me here.
I'll throw parties up on the grass. Don't come down here. Like
I don't want
I'll
to come
come up
down
to
there.
the surface and we'll do parties up there.
That sounds good.
Don't spend time down in the rabbit
I don't
hole.
want to
kicking
be
dirt.
like Winnie the Pooh getting stuck in like the entry to rabbit's hole.
Yeah.
Remember that story? Okay.
Yeah.
The reason edge cases feel impossible, I can answer this one. It's because they are impossible. No?
Yeah.
Did I get it right?
That's right. The waters are quick to get muddy with all the facts and the circumstances, especially. And as you've noticed, like Kimberly said, do expenses reimbursed on contractors go on 1099s? I get conflicting guidance on this. Sometimes the 1099 instructions seem to conflict the 1099 instructions. So it can be very demoralizing when you're on January 800. There's like thousands of days in the month of January, and you're getting a yes and a no on what should be a very simple, straightforward question. And there are too many cases where it depends. It depends. It depends on the nature and the substance of the payment. So we're going to dive into some of those trickier areas in our call today. So thank y'all for diving.
If this feels hard, it's because it is hard, not because you missed a rule.
It's bonkers. And this is, I think, what's so demoralizing is because we believe that 1099s shouldn't be this hard. Nancy, you say this all the time. And 1099s should not be this hard.
They should.
And they shouldn't be. It's the rules and all of the exceptions to the rules and all of the exceptions to the exceptions. And then all of the see here for details and no payment required to enter. Just there are too many things to keep up with. That's another reason why I built 1099 problems, is because no one should have to waste their time navigating all of this, where we're all spending time Googling the same exact questions. Might as well just have a central location for all of it. So y'all have felt this, right? When we're in that chaos of researching those edge cases, it's hours lost that we can't bill for, or we don't feel right billing for. It's hard enough to get $25 a form or $15 a form, or however you do your pricing for 1099s. It's difficult to educate clients on the value of the service that goes into 1099 prep. If it was just a client handing you a list of names, numbers, addresses, and amounts, just the 4 fields that you need for the 1099.
Which is how we used to do it back in the day, until we realized that we actually have some liability for having missed ones if we are also their bookkeepers, and we have liability on the tax side of things because there are now checkboxes on the tax return that say, yes, this is something that I have done.
So it drives those types of risk mitigation strategies that we employ to cover ourselves and to also cover our clients. How do we bill for that? How do we build that into our structure so that we're not running our brains over an asphalt cheese grater every January? That's how I feel like it is sometimes. But yeah, it's not your fault, and you are not alone. If we take a step back, and instead of trying to memorize the rules, if we just think about the framework and the purpose and the intention of 1099s, the tattletale form, as Shannon Tice calls it. Instead of thinking, okay, what's the rule? Think, okay, is it a personal payment? Is it a business payment? And let me show you the decision tree. Actually, I'll pull that up. Because if you've seen them, right? Those decision trees where it's like, if the payment was over 600, yes. If the payment is under 600, no. If it's a credit card, No, you've seen those decision trees. While I pull that up, the approach with using a decision tree is you don't necessarily need to be perfect, but you need to be able to just support your answer with reasoning. Let's see.
The thing that I think is so different about your decision tree, which I guess you've alluded to already, is always have liked to be like to start with, was it services? Yes. Okay. Was it a corporation? Yes. Was it more than 600? Yes. And if you do it in that order, you end up then later on getting to the, was it an electronic form of payment for which 1099-K would have been resolved? Whereas if you're asking that kind of question much earlier in the process, then you end up not having to go through the, for example, I don't even have to look at whether it was more than 600. I don't even have to look at whether it was a corporation or not. I don't have to do any of that. I don't even have to look at whether it was services. If I'm asking the 1099-K question, is this going to be reported on 1099-K, or would, if it were 1099 eligible, would this be reported on 1099-K? Then I don't have to look at any of those things at all. And I really appreciated the fact that you shifted that when you did your decision tree. And this is now the decision tree that's in my annual MSN article. I replaced the old one from bookkeepers.com.
That's awesome. And there are so many. There are just so many. So when we use this framework, we start with all of the payments made to all vendors, right? We start with a transaction list detail report. And the point is, it's reportable unless it's not, essentially. So the IRS tells us what's not reportable, and then it gives us exclusions and exceptions. So we have this giant list, and we're trying to use process of elimination and cut out as many chunks as possible. If we look at the reporting threshold, the dollar amount, and the category first, we're eliminating small buckets that could be completely thrown out with the 1099-K question. So asking, is this payment reportable on 1099-K earlier in the process, you get to chuck a whole bunch more eligible payments out the window than if you waited till the end of the process. Does that help? Okay. Does anyone have any questions on this decision tree or how to walk through the yes/no questions on here?
I think it might be helpful, you probably already have this later in your slides, is to actually use this decision tree to go through one of the edge cases. Yeah, okay.
Will. All right, I'm going to switch back to the slides, but we'll come back to this image a little bit later. Okay.
You were just trying to thank me for providing this snippet from a tax return.
Exactly. So here's a snippet of a tax return that Nancy alluded to earlier, where we think, oh, if we're not sure on a 1099, if we don't have the W-9, et cetera, we just skip it. But there are not only penalties, there's also this added question on tax returns where your tax preparer, or you, if you're filing yourself, you have to affirm whether or not you did or you will file the required 1099 forms.
And so this is where we get into a lot of trouble when a client hands you a list of 1099s to file. If we're not looking at the client's actual books, and if they haven't put in payee names or whatever, there's so many things that could be wrong with their books, or maybe they're only looking at profit and loss accounts. They're not looking at the balance sheet, for example, they are going to miss some. I don't think I've ever seen a client who's trying to DIY not miss something that I would have caught. And so on the tax return, it says, did you make any payments that would require you to file Form 1099? If yes, did you or will you file the required forms 1099? And the reason that language is important, the will you file, is that let's imagine, so we've got a long list here, which we'll be going through, of questions of these edge cases. Should I do this or not? Most of the time, the clients are going to miss these edge cases. And so we're dealing with them. And later on down the line, when we're filing that tax return, we go, oh crap, the client missed this particular one. It is now months later. This could be like something that's on extension for October 15th. And we're like, that is okay. We cannot legally check this. Yes, if we know that the answer is no. We can't legally do that as tax preparers. And if you have a tax pro who gets in trouble for this, they're very likely going to turn back to the client, and the client's going to turn back to you saying, why didn't you find this in my books? So my advice in those situations, better to file late than not at all, even if it's years later, because remember, it is the vendor's responsibility to declare that income, whether they received a 1099 or not. So if the vendor wants to get mad at you 2 years later that they just got a 1099, be like, dude, that was your responsibility. That was not my responsibility. My responsibility is to eventually get this 1099 to you. And that's what we just did. So keep that in mind.
Yes. Any questions on this, on the better to file late than not at all? Okay.
Danielle has a related question, which I would
Perfect.
love to address,
Mhm.
which is a very common one, right? What if a client says to you, I'll never get a W-9 from that vendor without a W-9? How can we file? It's my favorite edge case because it's not that edgy, to be honest. It's pretty common. So first off, we have language. And if you are an Ask a CPA member, this is in the 1099 in the resources section. There's an entry for 1099 resources, and this language is in there. And it basically says something like, oh, that's a real shame that you don't think you can get this W-9 from the vendor. Tell them, and I give this language to the client, or if I'm working directly with a vendor, I'll say this directly to the vendor, that even if they don't give us the W-9, we are still going to file that 1099, but we're going to have to check mark the box that says the vendor refused to give us the tax ID information. So it's still going to get filed. We're going to do what we can to find their EIN or their social security number. We are definitely going to find their address, because in most states, it's a pretty easy thing. The check was made out to somebody, and we can usually find that address. And even if we have to snail mail it, that thing is going out. And the IRS does do reconciliations. So we just say, hey, we're going to have to file this anyway. Generally, that's going to trigger an audit with the IRS. And I know none of us wants that. So
No.
that's what we do in those situations. Although when we're talking about that kind of situation, because Candy's taken this to the next step here, she says, don't you have to do backup withholding after that? Now, I actually love these opportunities. I love these opportunities because Candy, if you're doing backup withholding, it means you are still paying this person, right? Do you think I'm going to give that person a check? Do you think I'm going to give that person any payment after they have said, no, I'm not giving you a W-9? I never have had to do, I'm going to knock on wood, I have never had to do backup withholding. And the reason is that I tell that client, hell no, you are not hiring that vendor again. And I know you're saying you won't, I won't, but the client will.
Yeah.
The client, I'm not willing to work with clients like that. I'm like, client, you have two choices here. You can either do backup withholding, which I'm going to charge you out the wazoo for, or you cannot work with this person again and withhold that until they give you the W-9. And so I've always been able, in those situations, I've always been able to avoid the backup withholding because the client recognizes what a huge liability it is for them at that point, and they see how much they're going to have to pay me to do backup withholding, which they don't want. So yes, you do have to do backup withholding after that, but in those situations, it means you still have a relationship with that vendor. And so you have more leverage to actually get them to give you this information. It's when they disappear that it can be really hard. All we've got is an address. Usually you can find an EIN or an SSN somewhere, but not always. And so at least you've got that physical address.
Yeah, it
All
can
right.
be tricky. The IRS W-9 requester instructions do go into detail of what would be considered a reasonable attempt to collect the W-9 and the documentation around that. And it is very clear the initial solicitation, the initial request has to be at time of payment. And if at time of initial payment, initial hiring them, if they don't provide that TIN, that taxpayer ID number, the IRS instructions are very clear. That is when backup withholding begins, at that very first payment.
So Sandy's got a related one. She says her biggest problems are client driven. She's got a business that got loans from individuals, friends and family, doesn't want to send a 1099 int because the person who loaned the money said they don't want a 1099. That's fraud. That's legitimately fraud. And I would threaten a client in that situation. And the way I would threaten them would be the IRS. I am not willing to risk my CPA license or my professional liability because you are not willing to follow the law. That I'm not. And that means we're either doing this or you're going to have to find yourself a new bookkeeper because I am not willing to do that. Now, that's a big call my bluff. I recognize that. But I hope in these kinds of situations that you can say, I'm not bluffing because it's not just fines and it's not just penalties. Willful disregard is fraud, right? That is
But I
not
looked up and
following.
it says the penalty is $680. It's not like huge.
And they
No.
did index for that for inflation originally, didn't they?
Yeah, they didn't originally, but eventually they came back and did. 680 is actually a pretty decent one. But remember that
Per
680
form.
per 1099.
Per form.
Yeah, that can get really big really fast. But it's also, I think that the bigger issue here is to communicate that this is fraud.
Yeah.
It's not just about the penalties. You are not following the law. You can get in way more trouble than just this penalty. And I don't want to work with somebody who doesn't follow the law. Candy's saying she's told clients that if they don't want to issue a 1099, that I will reclass as a distribution.
Yes.
We also do that because someone has to pay tax on the money and they don't want the vendor to pay it. So if they don't want the vendor to pay it, they have to pay that. And it cannot be considered an expense of the business. What are your thoughts on that? I completely agree. We do the same thing. However, that doesn't get them off the hook. That is a very occasional, okay, we'll do this. If you're not willing to issue them a 1099 int, then it is not a bona fide loan in the first place. Where's your note? Where's the interest stated? If you're not willing to follow these rules, then it's not a bona fide loan. You're not going to be able to deduct that interest. And if the person defaults on the loan, you're not going to be able to write that off, right? There's a whole world of rules surrounding loans, and it is not okay for them to do this. So Candy,
How can we protect our liability? Just saying, okay, you refuse to provide the information so we can file the proper 1099 and any liabilities on you?
again, I know this is really an intense way to handle it, but threatening to not work with them anymore because you're not willing to take on the liability is the most convincing version of that because it tells them you're for real. It tells them, no, I really mean this. I'm willing to walk away from this relationship because I don't like working with people who commit fraud. That is not the only way to handle it though. Like definitely you can say, okay, I'm removing, clearly these loans are not bona fide business loans. I'm removing them all from the books and I'm removing your interest. It's not deductible. Like this is all just an owner investment in the company.
I've had clients do that too, where they pushed back on the 1099 and I said, then that's a personal payment now.
Yeah.
And they were like, okay, fine, I'll eat it. And so they made it a personal payment instead.
Yeah. All right, I will let you move forward, Dymond. We do have a bunch of questions coming in and I've got them all on a document over here.
Awesome. So how many of y'all have heard the adage, when in doubt, send it out? Most of us, right? That used to be very reliable. because we didn't have the 1099K double reporting issue.
Right.
So before the 1099K came out, if you sent a 1099 to a corporation, meh, big deal. You know, it's not required, but you're not going to get penalized for it. There's no duplicate reporting happening. But since the 1099K hit the scene in 2010, if the payment belongs on Form 1099K, doesn't matter if it's actually reported, that does not matter. So if it doesn't meet the reporting threshold, does not matter. If the payment belongs on 1099K, it must be excluded on your 1099s to be reported twice. It's double reporting. So the vendor would be receiving a 1099 and a 1099K for the same payments, and they'll freak out thinking, ooh, I'm gonna be taxed twice on the same income. Not okay. So that vendor is either going to be very frustrated and ask for a correction, or their tax preparer will have to make the corrections on their tax return after doing a 1099K reconciliation. And the only way to fix it is to write into the tax return, on the vendor's tax return, the recipient's tax return, hey, here's a 1099 NEC that was filed incorrectly. Please remove it. Thank you so much, IRS. So now the IRS has on record that there's an incorrect 1099 out there, just waiting for a penalty.
Now, I want to add that the when in doubt, send it out still, in my opinion, should still apply if we're not concerned about 1099K reporting.
Correct. Correct. Yeah. If we're not concerned about 1099K, then, you know, send,
Like I said, we know that we sent somebody a check for a certain amount and we're unsure maybe whether it was services or not, or we're unsure whether they're a corporation or not, or we're unsure about something, but we know we sent a plain old regular check, then that would be a situation where I would say, when in doubt, send it out, because it is better to have issued it and they throw it away because they're a corporation, or they say, no, this wasn't services, you shouldn't be giving this to me, or this wasn't rent, you shouldn't be giving this to me, whatever. I'd rather have that situation than penalties for non-filing.
Yeah, great. Let's see. We already went through sort of some of the decision tree. I'm happy to show that again, but I do want to keep space for your questions. So I'm going to buzz right through. Okay, payments on behalf of another, intercompany transactions. Those are the due to, due froms, Alicia, that you were asking about. Scholarship recipients, cleaning service workers. These are some of the edge cases that Nancy and I see pretty frequently. But I also want to prioritize some of the questions that are coming up in the chat too, since y'all are here. Let's see.
Hey,
Transactions.
go ahead. I can start going through the list of questions. Some of them are going to line up with some of the ones that you have here, is what I'm guessing. Does that sound good? Okay.
Perfect.
So let's talk briefly about 1099 for barter transactions. How do you handle that, and what are your recommendations? I'd love to hear yours.
For barter transactions?
Yeah.
Okay, so a barter transaction is a transaction that belongs on the books. It happened. It's an exchange. It falls under commerce. Just because there wasn't a payment necessarily.
It doesn't mean there wasn't a payment.
Doesn't mean
Just
there
because
wasn't
there
a
wasn't
payment.
a payment doesn't mean there wasn't a payment. Yeah,
Right.
I would say exactly the same thing. In our case, a barter transaction, presuming we know about it. And honestly, although it is one question on our tax organizer every year, we're not aggressive about this. But if we know about a barter transaction, then we simply put it on the books and we treat it as if it were a cash payment. So it's actually weird because it's one of those edge cases that isn't really an edge case, because it's the same as if you paid somebody cash or a check for a service. So treat it like that, put it on the books as an expense, but you also have to put it on the books as income, because that's the other side of the barter. The debit is the service that you provide, or that they provided you, and the credit is they paid you money in theory, and then you gave it right back to them. So that's how barter gets handled. There's another one says, I see check card on the bank statement. Does that mean it was paid via credit card and the vendor will receive a 1099K? Sandy says she's pretty sure those are debit card purchases. So do you agree? I don't actually know the answer to this.
So inside the rabbit hole. So most debit card purchases are reportable on 1099K. If the vendor is accepting debit card payments as a payment method. Okay.
So that would go on 1099K and therefore we don't have to send out a 1099
Correct.
NEC for it. Okay. So Sandy's saying, I think those are debit card purchases, so no 1099K. I think she means they're debit card purchases, so the vendor will receive a 1099K, so no 1099 NEC is
Oh, yeah,
required
that's
there.
what I
Yeah.
meant. Sorry.
Yeah, that's what I thought you meant. I'm like,
A K on the brain.
Okay, another one we've got that is 1099K related. 1099K is difficult. I agree. How do you verify that a client paid Venmo or PayPal goods and services and not personal or friends and family?
Unfortunately. So PayPal and Venmo, they have CSV files that you can export that gives you the payment transaction history for a certain period of time. Unfortunately, there is not a column for personal versus business on that CSV report. The only way to know if it was a personal payment or a business payment is to drill into the payment details inside your Venmo or PayPal app. It is in the payment.
And this is where I'm going to give my personal perspective. This is not legal advice, okay?
None of this is
legal advice. There's only so much we can do, and we're only getting paid so much to do this. And in the case of family and friend versus goods and services kinds of transactions, we're generally talking about pretty small dollars. The client's intent is not fraud. The exposure for the client and for me is extremely small. I am not going to click through every single one of those. That's me and my firm. I don't know what the IRS would say in a situation where it turns out you missed something. If we're talking about missing $162.12, oh, okay, fine. Good luck to the IRS for finding that teeny little weeny thing. And do I really think that they're going to come after me? Now, generally, we do not make decisions in tax based on how much exposure there is. That's not an acceptable, the IRS and the AICPA say that's not an acceptable perspective. However, you do have cost benefit analysis. And when Venmo and PayPal include a column with this information on it, I will be happy to export that CSV and sort it once a year and make sure that we're handling those. But there's only so much that we can reasonably do. So take a deep breath and don't worry too much about every tiny little thing. Let's focus on the bigger dollars and also the bigger concept, right? Is the client trying to do right? Is the client trying to follow the law?
Mm-hmm. Yeah, intention really matters. That's why there's a separate penalty for intentional disregard, not accidental.
So a related one, Candy saying, what about when they make payments through one of the friend's features? What should be happening there, Dymond? Let's pretend that we have a client that's using the friends and family for every single one of their transactions. So we don't have to drill into each one separately. We know they're doing that. We know their business payments. How do you handle that?
So what I tell my friend clients is it violates the terms of service to use the friends and family option when making business payments. That violates the terms of service for Venmo and PayPal.
So this is not just 1099 question. They legitimately should not have been using the account in that way. So they need to get a business account.
So they need to They either need to get a business account
or mark
or just
goods
check the
and
box.
services.
Just, yeah,
Okay.
if you're paying a vendor, you don't need to have a business Venmo or business PayPal to do that. You can use your personal account as long as you check that box. So it's a great opportunity to educate our clients. If you are using your personal Venmo or your personal PayPal or personal Cash App or any of these other digital wallets, if you have a personal one and you're using that to make business payments, you must check the box that says this is for goods and services, this is a purchase. And usually there's a little notification that says the vendor, the recipient, will be charged a fee for this payment. That fee covers a whole bunch of things, including the 1099-K reporting responsibility for those payments. Yeah, go ahead.
Okay, great. We've got a question here on interest paid to owners, and it just said interest paid to owners, so I'm not sure if there's a specific question about it, but I would like to take this opportunity to remind everybody that the int and the div are the two most overlooked forms that I tend to see when I'm preparing taxes. And that's because most people here know that we only file taxes for companies for whom we have also done their books. However, it wasn't always like that. And there are plenty of situations where I've had books coming into me and I'm like, I can see that you paid interest and I can see who you paid that interest to. And I can see that the interest is being paid to the owner. Now I'm doing the owner's personal taxes. Where's the 1099-INT? Where is it? And it's not like tax pros can't see this and don't know it's happening. And so this is one very low lift, easy thing that we can do to make friends with our tax pro. I'm going to not just call them compatriots, but like referral partners, right? These are the people we want to make their lives easier so that they send us more work. If we like them, if we don't like them, we don't want them to send us more work. And in this situation, if you just make sure that you are tracking loan to shareholders separately from everything else, which is a line on the tax return, so we do want to track that separately, then it's pretty easy to look at the actual payouts throughout the course of the year. So not just waiting until this time of year, but making this part of the monthly workflow. So we're looking at it and we're going, oh, looks like there's been activity in paying off this loan to shareholder. Is there a promissory note? No. I think that you should get a promissory note. Help your client figure out which type of loan it should be. You don't want to actually fill out the promissory note for them. We're not lawyers, but we can help them figure out which version to download from the internet and tell them to run it past their lawyer. And then what we can do is that we can calculate the interest rate, the minimum acceptable interest rate. There's a procedure for that in Ask a CPA as well, and the resources. And in doing that, it means that at the end of the year, nobody's going to be surprised by that 1099 INT. You've already had that conversation. You've already calculated the proper interest rate. The loans are documented. You've made sure this is an arm's length relationship. So that's how it should be handled. And yet I see a lot of people forgetting to issue those 1099-INTs. We had a situation yesterday in our own firm where we had not realized that a partner had a loan on the books. It was a really old loan. They were cash basis, so we weren't accruing interest or anything, and we just forgot about it because I never thought she's never going to pay herself back. But then she took a bunch of guaranteed payments this year. And we were like, wait a minute, why are you taking guaranteed payments when you could be paying yourself back for this loan? It'll actually lower your taxable income. So we decided to do that and we reclassify the guaranteed payments as loan payments. Now we've got this loan from 2020 and we're like, what the heck? It's undocumented. We don't know what interest rate it should be. And we had to go back in time and figure out how to come up with an interest rate that would make sense for her. So that kind of thing is really common. And then divs are the other one, 1099 DIV, which is dividends. This is what happens with C Corps. If a C Corp makes a distribution, we're used to draws and distributions all the time. But if a C Corp makes a distribution, it's a taxable dividend. We generally want to avoid that. So we need to be looking at the distribution accounts for our C Corps. And if it really was supposed to be a taxable dividend, we need to issue that 1099-DIB. So there are a
Yes.
few notes on your owner-related ones.
Yes. Excellent.
Due to froms on 1099s. Talk to us about that.
So the due to, due froms and payments on behalf of another person come up so much. And I was just telling a client this earlier because they split, they had another baby, another business babies, and now they've got sibling babies, right? So single owner, two companies, two separate entities with separate expenses, separate books, separate tax returns, right? Same owner. So that means these business babies are siblings of one another. It means they are related entities, okay? So this particular client example, when they launched baby number 2, they didn't have all of the accounts and everything set up for baby number 2 yet. So they were using Big Brother's accounts and everything to fund things and pay things and various whatever. So those transactions are intercompany transactions, right? They don't belong to Big Brother. They belong to little sister, okay? So anytime you have these payments going back and forth, you run them through a due to, due from account. And it's a mirror account on both books. So if you were to line up the books together, those balances would zero out because they are mirror images of one another. They should zero out. They should zero out.
But yes, they should zero
They
out.
should zero out. So in this case, the single owner is the same for each entity, right? So when little sister has an expense that comes up and Big Brother pays for it, the business owner of little sister absolutely knew about that payment, controlled that payment, managed that payment, oversaw that payment. That means Big Brother has the reporting responsibility.
Because Big Brother paid the money to the vendor.
Because Big Brother initiated that payment.
Yeah.
Even though it was on behalf of little sister.
Yep. So this
Little
is the
sister...
same exact answer for the tenancy in common question that we got recently in Ask a CPA. You don't do it as percentages. It's who issued the payment, who issued the payment. And the reason that the IRS has this rule
it's who issued the payment as long as they had management, oversight, and control. If they're just an agency, they're just like, oh, here's the money. I'm facilitating payments. I don't know what's going on. I just got an order. Here you go.
Which is pretty much never the case with our clients. And yes, Alicia says that's the opposite of what ChatGPT said about it. GPT literally told me with a tenancy in common to issue 35% of the 1099 from one owner and the other portion from the other owner. And I was just like, can you please give me that citation because I know you're wrong. And it was like, oh, I'm so sorry. You're right to call that out. You're right to call it. It's always telling me I'm right to call that out.
Yeah.
Which is good because nobody else in my life tells me I'm right to call anything out. So maybe it's a good thing. But yes, Alicia, that is true. And it is nice to be validated, Jessica. What's your recommendation for what type of account the due to should be? Oh, other current asset or other current liability. Yeah, depending on how long we expect it to be out there, it's almost always going to be an other current asset on one set of books and other current liability on the other. But sometimes that'll switch. And sometimes these are accounts where it's really common to have a negative balance because it's going up and down all the time. If these are active due to accounts, then the tax pro, when it sees a negative balance there, call it out in your work papers, in your notes to the tax pro. But even if you don't, they're going to see that in there and they're just going to make an adjustment on the tax return. They're just going to take that negative. They're going to stick it in a positive on the other side of the line. So that's not going to confuse them. They understand that's how it works with due to from accounts sometimes. So related to these, let me see, you talked about due to froms just now. It was I guess it wasn't related to this. It was related to something else on your slide, the rented dumpsters for construction. I did look something up last year for rental of equipment, and it does not count. Rental of equipment does not go on a 1099 MISC. It's not that kind of rent. And so you should be off the hook for that one. What else was on here? Payment to a title company used to wire money for a property. Oh, you know what? That's the one that I was thinking was related to the due to froms that you're talking, because this is somebody else made the payment. So what would you do in that situation? The payment gets made to the title company, but then the title company is presumably wiring the money to the property.
And this is similar to, we don't issue 1099 MISC for rent paid to a property manager, but the property manager owes a 1099 to the landlord if the criteria matches. So this one, we would need more facts and circumstances to really confirm, but typically.
And it might be getting wired to the property as a purchase, though, because it's a title company. So it's probably somebody buying a property, and that's a physical thing. So you normally would not issue a 1099 for that. So I agree with you. We'd need to know a little bit more about this one. Anybody who's on this call who's in Ask a CPA, please, if your question isn't getting answered during this session today, post it over there and I'll get to it. Let's come back to that reimbursed to contractors. I know we only have a couple of minutes, but I want to make sure that one happens. The Augusta rule rent, I'm going to have to look up because I actually don't know the answer to that because it's a self-rental situation, but it's an allowable self-rental situation. So I will have to look into that one. What do you do with expenses, and why is the answer it depends?
For the self-rental?
No, for expenses reimbursed to contractors.
Okay.
We were talking about that early on.
Thank you. So expenses reimbursed. Okay. The IRS is very clear. If you are paying a contractor for services and the invoice includes some reimbursable expenses like travel costs or parts, materials, etc., things like that, that's includable in your total gross payments. Okay, IRS is very clear. Where it's excluded is if it's a bona fide reimbursed expense run through a bona fide accountable plan, which has a ton of criteria that needs to be satisfied for it to be a bona fide accountable plan. But if you are receiving a reimbursement of an expense, that's not income. So that doesn't belong on a 1099. It's not income being reported. It's a bona fide reimbursement of an expense, and the person that reimbursed you owns that expense. It lives on their books. They have the receipts. They're responsible.
I don't see anybody handling this consistently. I just want to make that clear to everybody. In the end, if you explain to them that it will net to zero and that you're just following the IRS rules, that's okay. On the other hand, if they're really going to throw a fuss about it and they are like refusing to ever work with your client again or whatever, be like, fine, but this is wrong. And I am documenting the IRS did end up in that situation once where the person was just so angry. I was like, okay, I don't want to argue with you about it. It was another accountant too. And I was just like, this is not worth this relationship. That is one of the reasons that Ask a CPA exists, right? Is that no two accountants are going to necessarily make the same decision on this. The areas that I think are risky and I won't mess with, or the areas where I'm like, that's not really that big a deal, I'll handle it this way, it's okay. Those are my decisions for my firm, and the next accountant over isn't necessarily going to make those same decisions. So a lot of this is just my opinion, but that's a situation where I'm like, I'm not taking that one to the grave. Fine. Here's the IRS code that says it's supposed to be handled this way, and I have already explained to you it will net to zero on your end. But there was one time where I just didn't want to argue with it. It was fine. I think we got all of them except for the Augusta rule rent, which I will look up after the fact. And then the last one was, are we supposed to be coding transactions by debit, credit, etc., so that Intuit can find it when determining the 1099 amount? That's probably an Alicia question because I don't use QuickBooks for 1099s because I don't think it handles that well.
If anyone has any questions around 1099 reporting tools inside of QuickBooks Online, Alicia knows it backwards, forwards, inside out, and upside down. I can tell you the limitations.
Hour-long class on it that is only like $70 in Royal Wise. and it is so amazing. And anybody who's in Ask a CPA who's doing QuickBooks, using QuickBooks for their 1099s, I'm like, you just have to take this class because it will teach you literally everything you need to know about how to do it in QuickBooks. We don't use QuickBooks for it. We use Double to review the QuickBooks file, and then we use their export and we pull it into Track 1099. It also has an export that works with Tax 1099. So there are a lot of other ways to handle it as well.
Thank you so much, y'all, for investing your time with us today to go over some of these edge cases. This was amazing. Thank you so much, Nancy, for joining us today. Come on the town hall. Good to see you.
Thank you so much. Always good to see everybody in this group. Thank you so much for having me. Have a great one.
So I did drop some resource links on this slide. So if you are not already in the Ask a CPA community, please check that out. It's such a valuable resource. Also, if you're interested in some CPE, Nancy and I did a session with Double, formerly Keeper, for Earmark back in November of 2024. So that link is dropped in there for you. Also, the link to the QuickBooks or the 1099s in QuickBooks Online class, the deep dive class that Alicia offers. There's a link there for that too. And if this was helpful for you, or if this resource is helpful for you, please join the movement, because friends don't let friends waste time on 1099s. And y'all know a lot of people who hate doing 1099s that would love to have some of these magical resources and tools. So please share the virtual roadshow with them, share the decision tree. There's a link to download your own copy of the 1099 decision tree. And also we've got 3 more sessions of this virtual roadshow. So we've got another deep dive class coming up on Tuesday for W-9s, payment methods, and vendor setup. And then on January 29th, we'll be going over how to speed up that decision-making process, utilizing the decision tree and making confident decisions very quickly. And then on February 2nd, Groundhog Day, which is the actual filing deadline this year, since January 31 lands on a weekend. Congratulations, 3 more days to do your 1099s. On February 2nd, we'll be going over how to make next January a breeze by incorporating these 1099 decisions and processes all throughout the year, and to really build some tight year-round management systems, and how to build that back into your value pricing, build that back into your service agreements, so that all of your 1099 seasons can be sustainable and profitable, dare I say delightful, right? Help me get the word out. And if you've got questions, if you're already a pro subscriber, go ahead and drop those questions into the Q&A. But yeah, if y'all have questions or requests, or if there's a payment service that you're not quite sure about and you can't find it in the payment method matrix online, let me know and I'll add it. Thank you so much. Thank you for joining.